Hello everyone, welcome to the Ichimoku daily analysis for gold for Wednesday, January 27th, 2010. Well, quite a different candle today than we've seen for the previous 3 trading days, and a much larger body today, and a red body, and that tells us that the sellers have made some decent net bearish progress on the day in relative terms compared to the previous 3 days. So that could be a case for the market continuing in the first time frame and second time frame downtrend. The market is in a second time frame downtrend. We have a lower high and a lower low for the current candle, and there is potential for the market to continue. Now, the market did close down between the midpoint level and the low, which means that the bears have closed with control of this market, not very strong control, moderate control, and they have they've showed moderate commitment to taking this market lower throughout the day. They did lose some commitment later in the day though. Now, they did lose that commitment when the market traded down to this swing low here around the 1080 region where there was previous support. So that's quite a big number for this market, and we can see that we have a zone of support between 1080 and 1066. The 1066 bottom of this area coincides with the previous area of resistance where there was fairly strong and significant downside price rejection when the market traded up to that area on 3 occasions and was sold off. It did eventually breach that area, but there is potential for this zone between the 1080 region and the 1066 level to hold as an area of support for this market. Now, the market is trading in a range, and we can see that the market really isn't making, or hasn't been making, any net progress over the whole of these last 3 days. We have shadows on the top and shadows on the bottom of most of these candles, and it represents downside price rejection when the market traded around the 1100 region, which is a significant area for this market to trade above if it does break out up above there. But also down below here, the market found support over these last 3 days around this 1080 region, so that's a big level here. The market is trading down below the cloud or the Kumo, so we do have a negative market in terms of a bigger picture. And we also have the market trading below the Kijun-sen and Tenkan-sen, which is negative. And we had a crossover of the Kijun-sen and the Tenkan-sen. The Tenkan-sen crossed below the Kijun-sen, which was a sell signal, but it occurred within the cloud. So it was not a very strong signal, a moderate signal. It would be much stronger if it occurred down below the cloud. Interestingly, the Tenkan-sen and Kijun-sen have both turned flat. So what happens when they turn flat, especially with the Kijun-sen, it tends to be an attractor of price action. So there is still a chance that the market may be attracted back up towards the Kijun-sen. That Kijun-sen is trading at 1119 at the moment. So that 1100 region, any breakout above there is a chance that the market may trade up $19 roughly to around that level. Also, the Tenkan-sen has turned flat, and there is potential for that to offer support around the 1114 region. So with the market trading in the range, we need to watch this 1100 region, watch this zone for potential support between 1080 and 1066.